Ho, ho, ho. Yeah, I think GLW, guys, GLW's got a chance here. You got a gap down in some news, but let's see here. I said reduce expectations, blah, 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 specialized in glass, blah, 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 blah. The issue on this one is, yeah, like it's already starting to creep up. If we see at the open, like it kind of busts under these EMAs, then we can look at the ORB on this thing. Anytime you get like, if you get that pre-market action, but it starts to reverse, it goofs up your charts when you're trying to take an ORB on it. So there are like almost no good gappers today at all. I mean, this is like the cream of the crap. Like I don't see any of these that I would actually want to take. Even like OSTKA, like this thing's gapping up like 4 or 5%, but whatever, like that's not going to do anything, because this chart's busted. When we look at gappers, like we want really, really hot ones. As a market, even though with all this, hoopla that's going on, we're still holding at support. We need to just kind of come back and kind of retest, for our third tap here. So once we break 195, that's when things will kind of really start to shape up on it. In the meantime, there's tons of sector action going on. Obviously, you have software sector was getting demolished last week. It's starting to hold, but now you got oil stocks that are starting to go. So main watch list for today. Let's just go back through this. WLL on the red to green. This thing had 56 million shares of volume yesterday, right? Big range on this thing. Guys, when you're looking at the range of a stock, always kind of remember this too. If you get like, say, 4 or 5 green candles at the open, then that's not an ORB. The ORB means like you're going to pop up and then the first 3, 4, 5 candles are sideways from that opening range. So if you get say 5 or 6 green candles at the open, then the first dip, it's not going to probably hold. You need a much bigger dip. If the opening range was here and you had 3 or 4 sideways candles and then you dipped down to the 9 EMA, or like you started to pull from the 9 to the 9 EMA from the first candle, that's when the quick pullback buy actually holds credence. If you got 5, 6, 7 green candles at the open, you need much bigger pullbacks. You want to go 20 EMA VWAPs and then kind of let it coagulate. So these are like the small nuances of trading that are really, really important. Like when you do quick pullback buys, which is like your 9 EMA pull, it's usually you're going to have a gap and then it's just going to start pulling back the first candle, right? Because this sets the opening range. Your first candle is the opening range. So if you have ORB, it's your first 3 candles and then you go. Or you're going to pull back to the 9. Now, if you had like all sorts of other action, then you would need a deeper pullback, like a VWAP pullback, and then it's a go. So it's like the small nuance of how you trade the open. And remember, the open is really just that first hour. Once that first hour is over, you want that deeper pullback. So all these oil stocks, keep on your list, WLL, CRC, SM. You can add a whole host of them if you want. I mean, there's like XOG, and the whole top gainers list was all oil stocks, WTI, PTN. And these are all oil stocks, right? So you can put any of them you want depending on the price that you like to trade them. One thing to be mindful of is that you don't want to really hit these things on strength. Oil stocks are at their best when you get them on pulls the support. If you buy them at highs, then you end up having to kind of hold through. You got to end up holding through retracements, which sucks, right? Like anytime you hold through a retracement, what ends up happening? You end up selling it on support, then it goes back up. So don't put yourself in that position to do that. But I think these 3 give us the best combination of volume and range. WL, CRC, SM. This ACAD's opening up weak. This is what we actually want to see. This is probably my favorite today. A nice 50, 60 cent open, even a $1 open on this is beauty, because that's going to give us a chance to go red to green on this. This is actually a stock that's got enough range to do red to green too. You can see here, this is a $1 candle. It can move like $1 or $2 really, really quickly. So that's my favorite out of the non-oils. I still got all these software stocks on watch for potential short. But I mean, I may have overloaded them yesterday. You know, guys, we've had like fucking 3/4 of our list on these software stocks and didn't even do anything. So they're going to need a little bit more time because the 9 EMAs are just a little loose on them. That's totally cool. Like, you know, you just may, while this tightens up, you may get a couple green days, couple red days, couple green days while it does. I mean, this ZM is almost unplayable if you look at the action on it yesterday. So let it tighten up. Let it start to, you know, marinate a little bit. Then we're going to get this thing going. So I think for us, you know, we have our daily trader. So there's always a tier 1, tier 2, tier 3 when you're looking at trading. Tier 1 means stock is ready to go right now. These are that's your tier 1s are your WLLs, CRCs, SM, ACAD. Those are tier 1s, all right? And then GLW. That's your tier 1. They're ready to go right now. They're DTF. Tier 2s are stocks that are hot, but they're not ready to go right now. They need work. That's like your MDBs, your ZS, your SHOP, your Crowd. Like these are bear flags that still need to tighten up. So that's your tier 2. They're hot, but they're not ready now. Then your tier 3s are stocks that you just trade every single day that are always on your list, right? Tier 3s is JNUG, Crowd, FSLY. These are stocks that, you know, we just are always have on our list because they're ready to go. FSLY had a really nice 3-day pullback. I'm thinking this thing is ready to go today. If the market, you know, Lord willing. A couple of people asked about this OMI. Yes, this thing's probably near a bounce, but most likely this thing was just a big pump and dump. So they never bounce the way you exactly want. But yeah, it looks pretty good. So guys, remember, tier 1, tier 2, tier 3s. Let me look at Apple. Yeah, Apple, you know, it's a thicker stock, so it's going to gap all over the place depending on the market. Remember with Apple, it's just it's a proxy for the general tech market. OSTK is going to be tricky. If you try to bounce this thing, make sure it holds this low here. You could get a squeeze here. I mean, drop $10. Most likely it's going to be a dead cat bounce, but yeah, you could get a squeeze here. The SSR is on it. It was down 20% yesterday. That's hot. Yeah, and you can see, this is what I want to see. When you're looking at a stock, like you want to see, like, does it move clean? Does it actually react with, does it actually react to its MAs and stuff like that? Now that the SSR is on, you know, you'll probably get a little bit of a squeeze at some point. It's just, does it get back to 30? Probably not. This is a crashy pullback. Look at the volume selling. But can it like pop up to $23, $24? Sure, right? You know, you get that short squeeze and let it roll. So guys, let's go. Let's have a little fun. Let's do what we do. If I could turn back